Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. I'm Steve Rhodes, and I am excited to be with you folks. I have missed not being here. Hopefully you had a great time. I heard you guys had a party without me, a big party yesterday. We had the Dow up 160 points, S&Ps, everything was along in the party. You had the S&P up 19, gold was up, everything was up, and thank you for getting up this morning with me. It is such a pleasure to be back, and what a great trip out to Denver, folks. We had the Master Trader Series course out there on Friday and Saturday. And folks, you talk about, it's not about getting what you want. It's really all about experiencing what you really need by becoming more. And that is exactly what each of us did yesterday. In Denver. That includes the attendees, myself. You talk about being able to get through a B point with wide price spread and accelerated volume. We absolutely did that. I did that. And I needed just a little bit of time just to rest up, because the amount of energy that I used to get through that B point, folks, it was huge. And so just like the markets, you're getting through B points. We're going to take a look at ABCs out there. But I can promise you one thing. It was a great experience. It was incredible education that was shared. Everybody, I really appreciate everybody that attended. It was just a great camaraderie, but so much information that we shared, and we turned each other into better traders. Myself, the great thing about teaching these courses, folks, is it actually makes you a better teacher, a better student, if you will, because you simply have to step back and take a look at exactly what's going on in the marketplace, exactly what is happening out here. We're going to do that today. You can always give me a call at 877-927-6648. Now, for everybody listening to us on the radio, we really appreciate you doing that. And if you are sitting near a computer or your device, meaning your iPhone, your iPad, your your eye in the sky, whatever it might be, you can always watch us at TigerTV. Go to the homepage at tfnn.com. Click on the link there. You can watch us on Tiger TV, or you can bookmark the link on your mobile device so that we are just one click away. So good to be back here. And what I've got up on my screen here right now, folks, I've got the Nikkei. And the Nikkei 225, that was up big last night. You were up 236 points, closed out its session at 10,255. Important to take a look at the Nikkei, all the markets that we trade around the world. Right now, you've got the futures are off just a bit, but, after being up as massively as it certainly was yesterday, we're going to take a look around. You got King Dollar trading down, looks like maybe 4 ticks. Gold trading up $7 out at $16.92. Silver's up 25 cents. Light sweet crude, we don't want to hear this, but light sweet crude trading up 21 cents out at 107.23. Again, if we just simply, because it's a one world market, and in Europe right now, you've got the DAX is up 32 and the FTSE down 6 points. So what you're looking at on the screen, if you're following along here on Tiger TV, you are looking at the Nikkei. And important, really, when you're analyzing the markets, our markets, what is everything doing around the world? Because this is a one world market, and you're looking for synergy, or you're looking for something that's out of sync, so that you can, just as we've been paying attention to the small caps, because they have been the weak link in the chain. We'll take a look at the small caps today. You're looking for strength, you're looking for weakness, so that you can get some clues to understand what's going on in the market. You're also paying attention to what is going on around the world. Well, when we take a look at the Nikkei, you're going to see 2 red lines here. Now, this is a weekly chart that we're looking at. And so when you take a look at the weekly chart, what you are taking a look at is a downtrend channel that was established going back into 2009 timeframe. If you take a look at this first candle inside this goes back to June 2009. If we take a look at the high up here, this high was established in April 2010. Now, when you're making these channel lines, folks, what you want to do is you want to connect the dots. In our case here, we're going to connect the candles, and the portion of the candle that we're going to connect is either the high or the low of the body. In this case here, we're using the high of the body on April 19th. That happened to close out at 11,204. We're then our next point is going to be the high of the February 18th, where it closed out. So you can see we had a red candle here. It doesn't matter. You're using the top of the body. We're using the top of the body on the February 18th time frame. And you can see that, you can see how this has just stayed inside this channel until when? Until when, folks? This week, until yesterday, until, in this case here, until overnight trading this morning when it was up $236 $8.91. It is breaking to the upside of this channel. You can see here, these are not breaks. Even though you got below the downtrend here, a break, folks, is going to be a break in the opposite direction. So in this case here, where you've got a downtrend channel, the only break that you can have is to the upside. These down here were just simply false breaks. We're going to take a look at this. We're going to take a look at King Dollar, its monthly chart as well. And so the Nikkei is a place where we want to be taking a look at. Again, if we come all the way back here now, the Nikkei well off of its highs, right? Go take a look at the highs in 2007. So if you talk about the health of the world, and you know that we're close to our 2007 highs, take a look at the Nikkei. The Nikkei trading up near 18,269. You're only at 10,255. But we want to be able to stay present with regard to what patterns are going on right here and right now. And what we can see is the Nikkei is trying to break out of this downtrend channel weekly chart that we've got here. So we won't really know what the Nikkei is going to do until Friday morning. Friday morning, you can turn into this show, and we'll be able to find out exactly what the Nikkei is going to do. Let's go take a look at King Dollar. Let's see what King Dollar is going to do, because, I thought I brought King Dollar back with me. Thought King Dollar was on the airplane. And we're taking a look at King Dollar, folks. What you're seeing out here, you're seeing a couple of different patterns. The most recent patterns, these are colored in, that you're looking at. The most recent one was the Gartley sell pattern. The Gartley sell pattern completed out here on the 15th of March. You can see what it did was a 0.786 retracement. That's off of the high that was established on January 13th. And when you do a Gartley pattern, you're usually going to retrace back to the 0.618 area. If we take a look at the low that was established, and that low, folks, that was a 3-candle bear bullish engulfing pattern. That's this candle right here. That is on February the 29th. If we take a look at the low of that session, which was 78.12, we go all the way up to the high that was created on March the 15th. You will see that the 0.618 area is 79.28. You're trading out right now. Let's blow this up at 79.15. So you're trading below the old 0.618. But what did you run into? You ran into the top of that bullish engulfing candle. Do you think you ran into the top, like to the penny? Well, let's go take a look at it. Take a look at the top of this candle here, 78.93. That is the exact high. Let's take a look at King Dollar in intraday this morning trading, where it got down to 78.93. So you've got King Dollar inside a little ping pong game going on inside the top of that bullish engulfing candle. Now, it's really the bottom, folks. The bottom of that candle is really support, but you've run up right against, the top of that candle. That may, in fact, hold it. And if it holds it, King Dollar will move up. This market will pull back a little bit. I understand that feeling. I know how I felt on Sunday when I landed back in Florida, and it was good to get back to sea level. Amazing just simply how dry the climate is out in Denver. I mean, my lips were dry, everything was dry, and I needed to get back to sea level. Well, when you make that type of move with conviction, with wide price spread, with accelerated volume, you know what you have to do, folks? Sometimes you have to rest for the next move up. My next move up is coming here in Tampa. That is April 13th and 14th, so it's a couple weeks. You can sign up for that Master Trader Series there. You will not be sorry. I promise you that, folks. And then I'll be in Boston on the 27th and 28th as well. So you've got King Dollar bouncing around in between the 0.618, the $79.28 point, as well as the top of that bullish engulfing candle, and that again was at 78.93. So what that sets up, let's go take a look at the currency market. So because that's what King Dollar is really just the basket of currencies, and so you really have to take a look at what's going on inside the euro, the yen, the Great British Pound, the Canadian dollar, the Swiss franc, the Swedish krona. I think that covers all 6 of them. And you take a look at Queen Euro out here. Queen Euro, we can see also making now a 786 Gartley sell pattern, and you're trading, a little bit lower. Now, for what you're looking for from a bullish standpoint, I think from my standpoint, what would be best is to see the market pull back a little bit here and re-energize. When we do take a look at the currency out here, we take a look at Queen Euro, one of the things that you have to be aware of is when you take a look at the ABC pattern. The AB equals CD pattern in the euro has not completed. Our A point would be down here on March the 15th. The low there of 130.029. Well, our B point is out here on March 22nd. The high there, 1.32840. You can see when I pull it down to the trading session that followed on the 22nd, well, our 1-to-1 A to B equals C to D actually completes up here at the 134.137. And where you actually got up to in the overnight trading is you got up to a high of 133.844. That's just a little bit further away and has not totally completed. It wouldn't be, if we take a look at the exact 618 as well, we come off of the highs. I haven't done this yet. Let's come off of the highs to the low that we established. Let's see where we're at. That was actually dead on. That was dead on right there with regard to the 786, which actually stopped it. So, I'm going to say it's an incomplete, if I were giving it a grade, but that 786 area absolutely stopped it. You can also see that this number right here, 1.66, close enough to 1.618 of a swing point test, that swing point expansion being the high of March 21st and the low of March 22nd. So it only makes sense from sacred geometry, folks, that it would stop where it did. And we're going to find out today where it's going to. You got the futures off just slightly this morning. It is so great to be back here with you, folks. I'm excited. I hope you are as well. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Futures off just a bit. You got the ES Mini traded out right now at 14, 13, 15, or 50. And let's go take a look and see what we've got out there. Now, when we take a look, I'm looking at the 120-minute chart out here. You know, we can look at the daily. We can look at the 30-minute. Just simply happen to have the 120-minute chart out here. And if we start with the most recent, let's say, swing point going back to the 19th of March. Seems like so long ago. 19th of March, you had the ES Mini get up to a high of 1408, and then it moved down. It moved down into a Friday session. The low on Friday coming in during the 11:30 hour. If you're taking a look at the 120-minute chart, I believe it was more like 10:30 when the low was established. But on the 120-minute chart, you're taking a look at the candle going back into the 11:30 time frame. Made a low out there of 1308.50. And folks, when it made that low, it created a hammer candle. Not just a hammer. It created the sledgehammer of hammer candles out there. And what I'm talking about, take a look at this long lower shadow. Because these are candles, I like to call them wicks, and just really a small head, just a little bit of a wick above it. This is a powerful candle that was out there, and you can see that was the beginning of the bulls taking control that pushed the market all the way up into the highs. So far, the high that was put in on the ES Mini took place during the 5:30 session. It actually was at about 4 a.m. I believe, and that was in at the 1419.75 mark. But you want to understand these candles because they will give you a great idea of what's going on in the marketplace. And, you know, take a look at it. Think about it like this. Take a look at the market here. The market is moving down into lows, all right? And also, if we take a look at where was it retracing back to, well, there's a number of different swing points that are out there. If we just simply go take a look at the swing point right down here, the lowest one, that's coming in on the March 6th time frame, the last real correction that was put into the marketplace. And if you take a look at of course, that was like a one-hit wonder. That was a one-day wonder. And you take a look at the low that was out there, that was at 1338.50. You go from 1338.50 to this point where we started here on March 19th, and what you will see is that came down to a 0.382 area. You see that that's this line right here, this long line. 0.382 is, you know, where that sledgehammer hit. That's where the bulls decided to take over. And that means, folks, if you take a look at it, what happened is right here where my cursor is at, so during that 11:30, during that 120-minute chart, where the ES Mini opened up at 1388.50, traded all the way down into the 1380.50 area. So you had the bears just pushing it down, trying to jam it down, and the bulls stepped in the way and said, not on my watch. And folks, what it did here is it pushed all the way up. That was your indication right there, because you know you can only get these hammer candles as the market is making a low. It was clearly doing that, and you take a look at that. The bulls came in, they were pushing it up, and take a look at, obviously, you know what happened. You saw, you had the market moved all the way down from that low there of 1380.50 up into the 1415-ish range. Well, how did it get up to that 1415-ish range and stop? What was there? Well, how about some sacred geometry, folks? If you take, again, look at that high out here from March 19th, that's that 1408 area. That's from the 19th, go all the way down to the low of that sledgehammer there. And you take a look at an expansion of that swing point. Well, 1.272 expansion takes you to 1415. 48, 1450 is what it would have to be. And take a look. This here is the session coming into the close, coming into that candle, which you know you could call as a D point on an ABCD pattern here. Coming into that area, you were coming in there with wide price spread. You come into an area with wide price spread, says the work's not over. All it's doing right now, all the market is doing right now, is the same thing I did from the time I got home Sunday to me getting out of bed, maybe, last night, if you will, just resting, maybe retracing, getting ready to take on some more battles, if you will. And that's what the ES Mini is doing right here. And where that means that it's headed to, well, if you come through that 1.272 with conviction, your next stop is going to be what? What's your next stop in that sacred geometry number? We know that you've got 4 or 5 of those numbers memorized. 618, 786. On the expansion side, 1.272. And on the expansion side, 1.618. Folks, that sets up 1424.99, 1425. That is the next stop for the ES Mini until we see some other pattern out there. But the old sledgehammer, folks, that was pounding out a bottom. That was on the 120-minute chart. What happens if I put up a 30-minute chart? Is there a hammer candle out there anywhere? Is there, folks? There is. It's right here. Here's the hammer candle. That was tested. That said, no way. I want higher prices. That's what we saw in the markets. We get back, we'll go see how these markets are going to pop. You can give me a call, 877-927-6648. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. You got the Dow up 16 points, S&P's up 1.5, composite up 2, small caps just getting out of the gate. They're up about 0.5 point. You got Apple leading the charge up $2, trading out at 608. Google's up. Google's down $3. Intel's up 6 cents. Microsoft's up 8. Cisco's up 13 cents. Let's see. Dollar-wise on the way up. Right behind Apple, you got LinkedIn Corp. They're up $1.58. Scott's Miracle-Gro SMG. They're up $1.19. I think they're fertilizing America out there. You got Wabash National. They're up $1.35. Philip Morris. They're up 86. Lennar Corp. They came out with numbers today. Let's take a look at what they had to say. Lennar Corp. Out here. Well, I just lost that on my screen. They did come. Here we go. Lennar came out with numbers. Their fiscal Q1 earnings per share and revenue estimates, they say, is ahead of the shares unchanged pre-markets. They topped their forecast. That's all that I've really got on there. That's on Lennar. They're up. You've got Lyondell Basil. They're up 65 cents. Crocs, they're up 71 cents. Amazon up 86 cents. That's on the upside. Let's take a look at what's going on the downside out here. You got Total SA. They are down 6%. That is TOT as a ticker symbol. They're down 364. Apollo Group, they're down 354. They're down 8%. You got MAP Pharmaceutical, MAPP. They're off 17%. You got Broadvision down $1.94. Schlumberger, we know that the XLE has been struggling. It is the weakest sector out there. McMoran Exploration, they're down 161. You've got Expedia, they're off $1.05. Royal Dutch Shell, they're off 90 cents. KBR Homes, they're off $1 as well. Baidu off 80 cents. 877-927-6648. Let's go take a look at the ETFs. Let's go take a look at yesterday's action, see what we have out here. And we're taking a look. Okay, the diamonds are what pop up on my screen first. Now, the diamonds here, make sure that I have this all refreshed because I've been away from the computer here for a bit. And so let's just make sure that all my charts here are updated. So we're taking a look at the diamonds. You had a nice gap. Let's get rid of some of these lines in here. Let's just start from scratch. So let's take a look at the diamonds, what the diamonds are doing. The diamonds going into the March 16th swing point. So did not make it over the March 16th swing point. The high out there was 132.61. Traded out at 132.18. Is that right? Let me make sure I got the right data feed going here. That doesn't sound right either. Let me switch over here. So I'm going to do a little bit of a delay here. While I'm doing a delay, let me tell you what's coming up here today. Following this show, Obviously, you've got Tom and I doing the Money Masters show. Then we go out to Santa Fe, 132.18. Then we go out to Santa Fe where we've got Kate Stalter. And then she's doing the small cap roundup for us. Then we go out to, I believe Chicago is where Victor Jones is coming from. That is a great option show, folks. That is at noontime. That is commercial uninterrupted. So you want to make sure that you are staying tuned for that. You know, TFNN just delivers a great lineup. From 3 to 4, the warm-up band for Tom O'Brien today is Ken Shreve. So we are trading out on the diamonds. That was pretty smooth, wasn't it? Just to make sure I have all my charts updated properly here. So you are trading out at 132.18. That's on the diamonds. The diamonds failing to take out the swing point high yesterday. You did 5 million shares up that swing point, March 16th. And as you came into it yesterday, you closed. Let me see if you closed into it. So the low on March the 16th was 132.02. You actually closed yesterday at 132.09. Got to love that. You do it with 5 million shares, 4.9 going into 5.7. So, you know, coming into it with volume. And so right now today you are trading up inside. You gap up just a bit here, looks like. You're trading inside it, 132.17, the low of the swing point, 132.02. And what you have to do, folks, you just absolutely have to respect this gap that you have out here. Just like you were respecting the gap down from March the 21st. As the market was pulling back. That was last Wednesday. You know, you have to respect gaps. We've got gaps all over the place, and but you still have to respect them. So what the diamonds have not done is they have not taken out that swing point high. Let's go take a look around at the other ETFs out there. Let's go take a look at the SPYs, see what the old SPYs, iSPY is doing. You take a look at the SPYs. That same swing point, meaning March the 19th, the high there is 141.28, 125 million shares. You blow through it yesterday. You gap up. You close above it where you closed yesterday at the session high. You close out at 141.61. The actual session high was 141.61. You close at the highs. You have a gap up, folks. You absolutely have to have respect for that. You need to pay attention to that. And it did, you had 125 million shares. Now, you were coming in with a little bit lighter volume, 119 million shares, almost 120 million shares. Close enough for me in my work. And you closed above it. You close above it. It says you can go higher. Now, here's what I want you to pay attention to. It's so important to take a look at these ABC structures. You want to understand the ABCs of trading. And, folks, I will absolutely teach you not just that, but so many little subtleties about this money game, about this business. You know, join me, if you will, in Tampa on April 13th and 14th. You can also join me in Boston on the 27th and 28th for 2 days that you will not forget for the rest of your life. It'll be the best time, best money that you ever could invest in yourself. You take a look at the retracement coming off of the March 6th low that was made out there up to the high on March the 19th. And what you can see is that all that you received was a 0.382 retracement. So I'm going to go ahead and delete that line, but all you were able to do, the exact 0.382 was 138. Looks like 138.64, where you actually got down to on Friday was the 138.55. Then you gap up, right? Now take a look at this. We're going to draw an ABC. We're going to come all the way down to the low, up to the high there on March 19th, back down to the low that was put in on Friday, and you come off of that point. The C to D line is what we're taking a look at, folks. I've got to pull this chart down here because a 1-to-1 A to B equals C to D. Where does that take you to? That takes you to 145.47. Let me go ahead and I'm going to leave that trend line in there, but you only did a 0.382 retracement. If you only do a 0.382 retracement, you think you're only going to do a 1-to-1 A to B equals C to D, folks? What do you? Let me hear. I can't hear you. That's right. No, you're not going to do just a 1-to-1 A to B equals C to D. You're more likely going to do a 1 to 1.272. That'll take you up into the 147.34 range, folks. So 147.34. You got to clear 145.47, but that shouldn't be too tough of a hurdle, especially if you get some volume picking up into this marketplace. And then it looks, if we take a look at it and we go back and just simply take a look at this trend line coming off of the low here from December 19th. I'd take a look. I need to do a little bit more work on that, but it is interesting how you just run right into that bottom of that trend line. And also, if you go ahead, you just simply take a look at the highs coming back here from May down to the lows. If we take a look at that May high, all the way down to lows here in October that was put in, and we come back and we take a look at what do we have. What do you have completing here at that 1-to-1 A to B equals C to D? You've got a 1.272 expansion off of the swing points, the major swing points, as we take a look at the chart here. And so, that there is some sacred geometry A, B, C, D synergy going on. That is with your SPYs. Let's go take a look at the Qs out there. Well, the Qs, that's a whole different roadmap. That's a special roadmap that you have to have out there. And I don't know if I've got that roadmap, but let's go take a look at it anyways. We can go take a look at the ABCs of this roadmap. Now, let's do the same thing that we did here on the SPYs. And what we're going to first do, we're going to take a look coming off of the lows here from March 6th up to the high that was put in on the 21st. Now, if you take a look at the retracements, you notice how on the SPYs, you made it back to the 0.382 area. On the Qs, which we know has been the strength in the marketplace, can't even get close to getting back to the 0.382 area. 0.382 would have been the 65-ish and change, 65 to 66. All it does is get down to 66.56. Folks, let me just make sure. That was 65. Yeah, doesn't even get down there. That says you've got some major strength still. Does that mean Apple's really going to go and be trading out at $1,000 a share? Well, I don't know what it says, but I do know what these charts are saying here, folks. You take a look at, let me get rid of this line here. You take a look at the swing point high of March 21st, which was 67.49. What do you do yesterday in the Qs? You close out at 68.11, session high. You blow through it with on the volume there. You did 40 million shares, was taking out 39 million shares. So it is important to absolutely take a look at strength and weakness, because they're going to give you your biggest clues out there. Well, then you start taking a look at this little ABC, this little junior ABC, the same one that we had in the SPYs. And folks, let me just make sure that I can pull this down here. Where does that say the Qs are running to? It says the Qs. Now, if you're going to do more than a 1-to-1 A to B equals C to D, you're certainly going to do a 1 to 1.272 in the Qs. And where's that going to take them? That would take it up to 71.96, trading out at 68.15. But give it a little bit of a break. It needs a little rest, just like I needed a little rest. I still need a little bit more, but man, my batteries are charged. It's just the extra batteries that I carry on my backpack that I'm trying to charge up now. That is on the Qs. Let's go take a look at the small caps out there, see what weakness is doing out in this marketplace right now. You got the small caps trading out at 64.51. Same type of setup where you've got the gap up from yesterday. Let's go take a look at that retracement off of the low from March the 6th up to the high that was put in here on March 19th. Now, when we take a look at this, we're going to notice a couple of different areas out here. Number one, you can see that you came back a little bit below the 0.382. Now, that would make all the sense in the world, wouldn't it, folks? Because you're taking a look at the weakness. You have the strength, which is in the Qs, can't get back to the 0.382. The SPYs, kind of the middle of the road, if you will. They get back to the 0.382. And where does the small caps get down to? Almost to the 0.618. 0.618 would have been $80 in, maybe say 81. And where does it get down to? It gets down to a low of 81.25. $80 and maybe 69 cents or so would be the 0.618. So it makes its way down there. What stops it on the way down? Well, what stopped it on the way down is that breakout from February 2nd, that February 2nd to February 3rd. You take a look at the volume that was inside the small caps. That had 72 million shares. As you were coming back down and testing that area on the 23rd, on Friday, all you had was 46 million shares. 46 million shares down there. Came into that swing point where you had a gap up. That area has held up until, this March 6th area. But it came into that space. And what do you do yesterday? You gap up. You're trading up today. You're at 84.57. Where are they headed to? Well, all you've got to do is take a look at the ABCs. We take a look at that ABC pattern. I'm going to go ahead and get rid of some of those other lines out there as well, just to make it a little bit easier for, well, I didn't mean to get rid of that line, but as long as I did. Let's go redraw it again. Let's get rid of all these lines out here. There we go. So now let's go ahead and take a look at the ABC pattern that is setting up on these small caps, on the IWM. And folks, that would take you into the 87 40-ish range, 87.24. Now, in this case here, because you do almost a 0.618 pullback, whereas we were taking a look at the SPYs, whereas we were taking a look at the Qs doing a 1 to 1.272, I would expect in the small caps you're looking at 87.24. And if we just simply come back here, let's go take a look at what is that going to take you to. It's amazing how this stuff works. Well, it's going to take you all the way back here to the highs put in on May 2nd. And we know that that has been the weakness out there. So it only makes sense that what the small caps want to do, just like their brothers and sisters out there, they want to go test that May 2nd area. Swing point on May 2nd, the low is 85.28. The high up there is 86.81. That is on the small caps. Let's go take a look around and see what's popping and what's not popping out there. So let me go ahead and clear these screens here. We'll go ahead and close all these windows. Oh, I didn't mean to close. Well. Let me. I guess I wasn't really paying attention here. Close all windows. There we go. Now, so let's go see what is not popping here. Let's go take a look at TOT is the ticker symbol. They're trading down 6% total. Let's just see what that chart setup looks like here. See if there's anything that makes sense there. TOT, you can see how that, though, okay, that gap down with volume. Not good news. Let's see what's on there. What's the reason behind this? Short-term underperformance detected in shares of Interoil. Boy, the oil and gas market. We're going to go take a look at the XLE in a minute. Where is this thing? Look at this thing. Gaps down. We've only been open for 18 minutes of trading. Already done 5 million shares. It's coming down into its gap up area. Now, when it gapped up, going back to January the 17th, you can take a look at this doji candle over here. And if you take a look at January the 17th, gaps up with 2.8 million shares. Off of 3.9 million down. Boy, it's got volume to bust this thing much further down to the lower side. If we take a look at just this little ABC pattern that it is completing here on the way down, this is coming off the highs from the 29th of February. And folks, what kind of candle is that on February 29th that this actually made out there? What is that? What is that? Do you see that? You see that little red candle up here? What is this? That's right. That is a bearish engulfing candle. Engulfs the prior session, letting you know that it was time at the top to take a break. Well, not only did it take a break, it did a 1 to 1.618. A to B equals CD down. Has got some major volume in this thing this morning. If we pull this thing back, try to take a look at this, boy. Look at this stock here. Take a look at this island reversal candle that this thing made coming in here to October 27th. Pretty amazing that you didn't see much lower price than it got down to on November 25th. 877-927-6648. Dow's up 15. S&P's up 3. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. 877-927-6648. Dow's up 10 points. S&P's up 2. Small caps up about 1.5. They got the composite up 5. Apple still throwing a party, trading out at $612. And you know what I have up on the screen here right now is the XLE. I had mentioned, Schlumberger trading off $1.82. Right now, they're part of the XLE, as well as you've got ExxonMobil, Chevron, and a number of others. We take a look at this. Now, what you did here on the XLE is you completed an A to B equals CD down that 8 point, starting off at the highs of February 24th out there at 76.50. It makes its way down to a low on March the 6th. Makes sense, right? So moves all the way down to the 72.58 time. That's your A to B. It then retraces. Looks like it's probably about a 0.618 retracement. Let's go measure that retracement out there. And no, more like a 0.786. Did I say 786? Well, if I didn't, I should have. 786 retracement was at 75.66, where it actually got up to, on its retracement, it got up to a high of 75.47. We're going to cut it some slack and give it that extra 18 or 20 cents, if you will. And so then it goes ahead and it continues its way down. Now, as it was making its way down into the D point, which was on the 22nd, which was on Thursday, it gaps down into it. That is telling you right then and there that it wants lower prices. When you gap into a D point or you have a wide-ranging bar, and folks, a gap and a wide-ranging bar, very similar. You just have to use your imagination and you can fill in this little space out here. Says it wants lower price, trading out at 72.52 right now. That's assuming that I've got a good data feed going on here. I should just check that out just to make sure. I want to make sure here. 72.70 looks like I do. Okay, 72.60. There we go. At least we got the right data feed. 72.60. And so what it does, it makes now when it Gap's down. Does it with 20 million shares. You're taking out the B point that was out there on March the 6th, which only had 13 million shares. Right now, all it's doing, it's going up there and it's testing that B point, that March the 6th area. Yesterday, it gets up into that area with 10 million shares. Well, that 10 million is going into 13 million. That is doing nothing more than a little bounce. You'd love to see this thing maybe bounce just a bit more. Let's take a look at the retracement that it has done just simply in this C to D leg. And there, folks, we're coming from the high of March 19th all the way to the low that was put in last week. You can see it's only done a 0.382 retracement. Well, I could easily be setting up your next A to B equals CD down on the energy sector. It'll be interesting to see how these markets make it to their highs without the energy sector participating in there. It's going to be tough. But these markets have shown resilience out there. Where's some of that resilience coming from? Certainly coming from the financials and obviously the tech sector inside the XLK. Let's go take a look at the financial sector. Financial sector trading out right now at $15.99, and it's got higher to go for sure. What the financial sector wants to do, the XLF wants to get all the way up into the highs of February the 22nd. That would take it up into the $17 range, trading out at about $16 right now. And why do I say that? Because you've got this beautiful Tiger Gartley, if you will, that has failed. And the failure there, you had a 0.786 retracement coming off of that February 22nd-ish high. You had a 1.618 expansion off of the October 27th area. You gap up on, it looks like on Thursday. You gap up yesterday. So you gap up yesterday. Now, the gap up yesterday, you do 77 million shares. At 77 million shares going up against 112 million shares. Still doesn't have enough juice. Needs a little bit more juice. And I understand that, folks. Thanks so much for being here. Stay tuned. Tom and I are coming up next. Then we'll go out to Kate Stalter, Victor Jones, Ken Shreve from 3 to 4. Great to be back with you, folks. Have a great morning. Take care.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Great Basin Gold is a mining company engaged in the